Hello and welcome everyone to Silver Asset of the Day for the 21st of January 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, if you haven't done so already, make sure you watch yesterday's report where we went through in detail with you all of the expectations and forecasts that we gave on the 21st of December. And in fact, many of those predictions in the last 24 hours, they have played out spot on. So silver prices, they have now hit $24.50 per ounce in the last 24 hours. Platinum prices have just hit our target at $1,050 per ounce. Palladium prices have just tapped $2,000 per ounce, and also oil prices hit above $80 per barrel as well. Again, all of these projections we put out at the end of last year, and they've all hit target just within the first 3 weeks of 2022. We've seen some massive gains for ourselves and our clients at the Gold and Silver Club. In fact, now we're currently up over 5,000 points on our platinum position. We have 5 trades on this market. Not only that, we've also locked in 4,000 points of profit over the course of this week. So of course, for every 1 lot contract that you'll be trading, that's $40,000 of profit. For every 10 lot contract that you'll be trading, that's $400,000 of profit. And this comes back to our point that hedge funds, money managers, the banks and institutions, they are making multi-billions in the commodity markets. In fact, this is one of the hottest asset classes of 2022. We are just transitioning into that super cycle. Oil prices, they're already up 15% in the first 3 weeks of 2022. We are seeing some insane moves to the upside on commodities. Oil prices, they've now broken out to 7-year highs over the course of this week. In the last 3 days, we've seen impulse moves for platinum, which puts it up 9% in a single week. Palladium prices, they're up 8% this week. Silver prices, they're up 6% this week. And of course, just hitting our target of $24.50 on Thursday. So I do hope that you've been able to benefit off the back of these moves massively. Build out those positions early. As we mentioned to you previously, we built into 20 positions on the commodities over the course of December, then banked a windfall amount of profit into the new year, which have continued to do so as we scale out of positions, banking into strength, again banking 4,000 points profit over this week. Now, many traders, they're going to get delayed confirmation. They're going to FOMO in, they'll get in right at the end of the current cycle, of the current move, because they just use technical analysis, which, as you know, does not work. This then comes back to the next major news items that we have coming up. Going into next week, we have the FOMC statement. There's a very specific way commodities behave in the lead up to that and after the FOMC statement as well. Very specific cycles for you to capitalize on. FOMC statements tend to create some of the biggest moves here for commodities, especially the metals. You want to look out for that. Going into next week, there's a very specific trade to be had on the energy markets that we capitalize on year after year. That's going to be another big opportunity. And then the following week after that, you've also got China on their 1 week public holiday for the Chinese New Year. And again, there's more specific cycles to capitalize on, particularly with copper, platinum and palladium over that cycle. So there's just going to be back-to-back opportunities for you to capitalize on in the coming weeks here. Again, hedge funds, banks, institutions, they are making multi-billions from commodities. It's not so different for the retail trader as long as you know what you're doing and you ditch technical analysis, because otherwise you're just going to get crushed in these markets. You'll keep on getting chopped up. You'll end up FOMOing in all the time, catching the top of the moves and then getting big liquidations once you get the pullbacks and corrections. Whereas what you want to be doing is trading complete opposite to that. Be early into the moves, and then later on, once you've already had the impulse moves, bank a lot of profit and then repeat the cycle again, building into those positions. This is where you want to be utilizing statistics, data, market intelligence. Alongside that, understand the daily, the weekly, the monthly, the quarterly cycles for each commodity, the intermarket correlations, the ratios in the market, key areas of liquidity. Alongside that, the capital flows in the market, of course, the fundamentals, geopolitics, the macroeconomics, the major drivers for each commodity, and alongside that, awareness of how the hedge funds, money managers, banks and institutions are positioned in real time. That will help you in a huge way to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.